Thank you very much, Carl. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, record-setting stocks and the best way to invest now into this bull run. Joining me for the hour, Josh Brown, Joe Terranova, Sarat Sethi, Jim Leventhal. Check the markets today. We have record highs across the board. There is your picture, 12 noon in the east. The Dow, the S&P, the NASDAQ, all having a very nice day. The 10-year, as Sarah was just saying, the lowest since April 7th. Core CPI in line. The bottom line is that rate cuts are coming. And maybe rate cuts weren't priced in to the level that some people tried to make the case that they were. Is that the message right now?
I think the message today is that what's more important to the market is the labor statistics than the inflation report itself. I think today it was very clear. Initial jobless claims, seem to be more of a priority than, in fact, the inflation report. So now we're talking about potentially 50 basis points as a cut. We're talking about this just not being a one-time rate cut cycle. And I think the benefit for the market is yesterday when we were sitting here, we were talking about technology, AI-adjacent names, and really the lack of participation from the 493. Well, what do you have today? Today you have the direct opposite. You have the 493 participating. You have the S&P equal weight up 1.2%. You have the Russell up 1.3%. And you have the Fin 5 all making 52-week highs. Fin 5, Bank of America, Goldman Sachs, Morgan Stanley, JP Morgan, Citigroup, all 52-week highs.
All right, he feels he's proud of himself for calling it the Fin 5. Is that a you thing? Do you come up with that?
I did, yeah.
Right.
You like that?
I was happy he included Citigroup.
I knew what he meant right off the bat, but I liked how he had to list the names just to make sure that everybody knew how smart he was.
What I wanted to do was...
Are you going to create an ETF, a Fin 5 ETF?
No, absolutely not. Now, I want to make sure I mention Citi for Jimmy.
Somebody
Thank
will.
you.
Sorry, Josh, I come to you. Is this what I think Joe is saying, that this is a 50 bips rally? That what this is about? Maybe the Fed goes 50 next week and the market's trying to... Maybe 50 wasn't priced in. Maybe that's the point.
I think that's exactly right, and I totally agree with Joe. The market is, I don't think, happy to see a weaker labor market in terms of the human cost, but just in terms of blowing the Fed over. If they're sitting on the fence and they're not sure whether or not to do 25 or 50, I think when you listen to all the candidates for the job, even the dark horse candidates, they're almost all saying the same thing, probably to get the job, but also I think they believe it's time. If the Fed is waiting to see the whites of their eyes, well, this is what it looks like. The revision was pretty bad. Now you got an increase in weekly unemployment claims. The number comes in at 263,000. The expectation was 235,000. This is the highest print since October 2021, 4 years ago. So, like, this is it. This is the moment. So are we serious, or are we trying to take a political stance? And I think the Fed's serious. And the market today, the Dow being up the way that it is, following through, the financials doing what they're doing, and then
Russell?
like looking at the other, but wait a minute, looking at the other, first of all, the leading performer on the day today is consumer discretion, and then like when I look at the Dow stocks that are up the most, I got Sherwin-Williams, 3M, and Home Depot, and Goldman Sachs in the top 5. Like this is a rate cut. This is a rate cut rally.
Yeah,
There's no question about it. It's not about AI today.
Well, it's about kind of everything. And that was the point, you know, when I was out at Future Proof, Josh's conference the other day, speaking with Rick Reeder of BlackRock, Sarat. He thinks they should go 50, the Fed, and maybe the market's trying to get its arms around the idea that it actually might.
I think that's right, because if you do 25, it's kind of like, we don't really know what's going on, but we're kind of doing it maybe for political reasons. You do it for 50 because the numbers are now showing that you need to do it. And the market is now discounting the 50. And on the other side of it, you know, to go to your Fin 5 point, why are they doing so well? Well, look at the IPO market, right? You've got IPOs coming. Look at the M&A market. You've got almost every day or every other day, you've got something going on in the M&A world. Wealth management businesses. So, and the consumer with lower rates, and if you look at companies' balance sheets, it's all going to be better. So I think the market's kind of responding to it ahead of it. And I think if 50 comes, then at least we'll be there as opposed to being behind the ball.
Jimmy came in with a big bounce in his step today. Well, he did yesterday, but I wasn't here to see it. So now that I'm back, I mean, Oracle coming off its best day since '92. I know you felt good yesterday. I wonder what you were wearing yesterday. Probably had a nice bright tie on.
Joe, what did I wear?
You probably had a little.
I don't know, Jimmy.
A bounce in your step.
He sure did.
But you've been raising cash. You've been raising some cash lately.
Yeah.
I feel like you were a little nervous about this market, maybe undeservingly so, given where the price action has been since you have consistently been trimming some of your best winners. This market just keeps going up.
Yeah, I think this is a very good point to bring up. I did trim and I raised cash, 10%. And this is exactly why you don't do more than 10%, because the market's just running away. Now, look, don't anybody cry for me, Argentina. My stocks are doing just fine. There's more than Oracle in there.
You said the market, remember, you were sitting here, maybe it was 2 weeks ago, and said, hey, stocks could correct 5 to 10%. I'm trying to play that.
I was wrong. I was wrong. I mean, I don't mean to interrupt you, but hey, I mean, just wrong.
No, I was getting at that.
I know. That's why I tried to leap in front of you a little bit there. Look, I want to say two things. One, this is getting fully priced in, I think, 50 basis points. So I wouldn't be surprised if when you get the cuts, hey, we've already had it. Maybe you sell off a little bit.
You think that's a
not the
risk?
point.
Because I actually have heard that from others.
Yeah,
that you could get a sell on the news.
I mean, I haven't looked it up, but how many days in a row has the market gone up? I mean, this is pretty extraordinary what's going on right now. But what I would say is, while I'm talking about the short term, and yes, I did raise some cash, as you know, and we'll talk later, I'm putting a little bit back to work today. But I think that we're missing a point here, which is not that we need 50 basis points or 25 basis points, but that actually the economy is going really strong. Look, I see the numbers today. I'm not happy about the weekly jobless claims jumping as they did. But let's not mistake the fact that last quarter GDP grew at 3.3%. Right now, the Atlanta Fed is tracking at 3.1%. There is definitely a K-shaped economy going on. I mean, it's unquestionable. I was out Monday night at a steakhouse here in the city, and it jammed to the gills. To the gills. I mean, it is just, and look at air travel. Look at how Josh was talking about discretionary.
Did you say I'll have the A5? Is that what you told them? Feeling good about yourself? I'll have the A5. Make it the 10 ounce.
Disappointed.
Make it the 10 ounce.
He wasn't in the Hunt Fish Club, I know that.
Thank goodness he didn't have yet the earnings report that's coming later today, isn't it?
Oh, boy, welcome back.
Then
okay, go ahead. You want to
ounce.
set it up? No. Did you say 1 ounce?
Yeah.
O'Neill's.
What?
We'll do that later.
No. We'll get to that later.
Okay.
I want to talk about this note from Morgan Stanley today. They say even if the second half of September warrants caution, it is going to be a Herculean task to interfere with strengthening AI visibility into 2026. Real money simply cannot afford to have a tracking error at this stage of the year. Wolf today, the Mag 7 continue to outpace the other 493. They continue to favor that. It feels like the market does too, although on obvious days like this, with rates coming down and rate cuts on the horizon, you would expect to see maybe the small caps up 1.3%, something like that. What do you think of these notes?
I think that we are, and listen, we hear it every year when the S&P has positive performance you get through the other side of summer, chase for performance. You hear about a chase for performance, you hear about a lack of tax loss selling, and I think these are the catalysts that we're going to have in addition to continued strong earnings and rate cuts as you move through the fall. I think the bigger question as you move through the fall is how are you going to begin to prepare for 26? Because in 26, you kind of run out of a lot of these catalysts. It's also a midterm election year. I keep pointing this out. Markets don't like midterm election years. Markets in midterm election years like higher volatility and corrective behavior. So I think at some point, later in the fall, you have to begin to think about that. But for now, you could play into the narrative of the market continues to press higher and broaden out.
When you say you run out of catalysts, I mean, the whole point of some of these notes is that you don't run out of the AI catalyst. That's sort of the whole perspective. I was sitting on the stage out by the beach in Huntington Beach, and Rick Reeder was talking about that. That's why you're in what most people think are still given, even with the run in these stocks, even how their PEs have expanded, that you're still in the early innings.
So I think that the positive catalyst, the tailwind from the investment thesis surrounding artificial intelligence and the innovation advancing towards generative AI, I think that's a secular story. I don't think in 2026, if it's the only story, we will be able to defy a potential correction at some point. I think because there is maturity in terms of positioning for that thesis, maturity in terms of positioning. Everyone knows you want to be allocated towards AI. That's well known. And the cup is pretty full in that regard. So I think that, yes, you will see a pause that ultimately refreshes, but I don't think singularly that'll be enough to prevent a 26 correction.
Yeah. Josh, what do you make of this trading desk note from Morgan Stanley? Because we came into September saying, well, historically, it's a really bad month. And the market's trying to tell you, well, I know you didn't, but you know what I'm saying. I think that the broad thought was like, well, here we go, because market's usually bad in the fall, September and October. And we all know what's happened in October's past throughout history. They say, again, just to reiterate, even if it does the second half of September warrant some caution, which maybe some people still suggest it does, it's going to be a Herculean task to interfere with strengthening AI visibility into 2026. In other words, stay with this trade.
I think so, and there are a lot of reasons to stay with it. And one of the key one for me, and we don't talk about it that often these days, but I'm taking a big cue from what's happening with international markets as confirmation of what's happening with the S&P 500 and the Russell 2000 here in the United States. Market after market after market. I don't care where you look. I don't care if it's Europe, Asia, Latin America, China. There's just something very big happening here that transcends whether or not we get 25 or 50 basis points of easing monetary policy here in the United States. And obviously, what all of these countries have in common is a consumer that is doing what the consumer is supposed to do and spend. You look at the data all over the world. But then the secondary thing is this AI infrastructure build out, which is 100% a global phenomenon. Even the French are trying to be competitive in AI. So I think so long as those things are both moving in the right direction, international stock markets breaking out and AI CapEx being a global phenomenon, I think you're probably in more danger trying to fade it, quite frankly, than staying put. What could go wrong? A policy mistake. Right now, there's an 89% chance of a 25 basis point cut and an 11% chance of a 50 basis point cut. So the market's pretty sure that we're going to get something. I feel pretty confident that we will. I would tell people, though, you might not like the rhetoric that comes along with the cut. Remember, we used to joke around, we used to have a hawkish cut. Like, I don't know, do you want Jerome Powell in a Q&A talking about maintaining restrictive stance or whatever, or being vigilant about the inflation picture? Like, I don't know how the market interprets that. They might not like the sound of it. So I would never tell people we're all clear. But look at what's working today. You know, ARK is up 3.3%. The consumer discretionary names are up the sector up 1.6% on the day. 30% of the tech sector has an RSI above 60. 13 stocks have an RSI above 70. Semiconductors are making record highs. So, like, there already is a lot of enthusiasm. So I think there's room to just say, look, I'm going to ride this. To answer your question, I'm going to stay with it. But I don't necessarily have to be out there hunting down my next 3 stocks that I want to buy. I think there's room to kind of keep both thoughts in your mind at the same time.
The SMH, to Josh's point, all-time high. Micron, 52-week high today. Joe, Lam Research, record high today. KLA, record high as well.
Those are the 2 semi-equipment names that I like the most. Applied Material really hasn't participated as much as Lam Research and KLA Corp have.
Hey, what about Apple? This stock's been on a good run. You know, they had the big iPhone event, as we saw. Downgraded today, D.A. Davidson to neutral. 250 stays the price target. They say they were unimpressed with the strategy over the past year. I don't know, maybe many other investors feel the same way. They think Apple's going to be a meaningful participant in AI, just not yet. Sarat, what to do with Apple, which is up? It's down on the week.
Right.
So,
and Apple did what it normally does before you get into kind of their big event, right? It ran up into it, and then we got a little bit of a sell-off just because, again, it was incremental news. Yes, you had the very thin iPhone coming out, and you know, the 17 is, again, incremental. But what Apple's waiting to do is, at some point, when does the AI come, and waiting for other people to do it. So I think it's one of those things people hold in their portfolio. It's like a consumer staple in the tech sector. and it will do fine. And you just kind of, like as Kramer says, you don't trade it, you just own it, and over time.
Downgraded again, too, by the way, at Phillips Capital because of the recent rally. So the stock had the big run. Amazon named a top pick today at Morgan Stanley. Jimmy?
Love Amazon. I mean, all the shots on goal that they have. Obviously, the retail, Amazon Web Services, logistics. I forget, Joe, what we were talking about, some initiative yesterday with robotics with them. Yeah. And frankly, you know, this is a different valuation than it was 5 years ago. This is now squarely valued in a way that makes sense to me, and I think it will go higher from here. I also think that, you know, what we were just saying about Apple, and I like this idea of a consumer staple within technology. This is more, I mean, this is more pizzazz within the Mag 7. This has more reason to go higher right now.
Because this also has a very broad base of different businesses within Apple. I mean, if you within Amazon, if you look at not just the retail, but now you've got other businesses like their Prime Video, et cetera, that are all firing on cylinders. So I do think this is one of, I like it probably the best of the seven.
All right, back to this in a minute. I do have a market flash on Delta Airlines. Our Phil LeBeau has that for us. What do we know here, Phil?
Scott, take a look at shares of Delta under some pressure. Their CFO out at a conference in Laguna Beach, California. There's going to be a number of companies out there today talking about what they're seeing in the economy. And for Delta, what they're seeing is that the main cabin revenue is still negative. And that is one of the headlines that came out within the last half hour, and that pushed shares of Delta down about 4%. The interesting thing is that they were negative in the second quarter, 5%. And at the time, when we talked to Ed Bastian, and we've talked with him a number of times, they have said they expect that over time that the main cabin would be improving. But clearly that is not the case. That is the lower end consumer continuing to show pressure. So again, Delta saying that the main cabin revenue remains negative. That is the reason shares of Delta and really a number of the airlines under some pressure. Remember, they were up about, Scott, 22% from the earnings report in the beginning of July, just through last week. So a number of people have been saying if there's a time for the airlines to pull back a little bit, this might be it as they go into what is the slowest time of the year for the airlines, basically September, October, really until you get into the holiday travel season.
All right, Phil, thank you very much for that update. That's Phil LeBeau. We've got some ownership over here.
Yeah.
What do you think about this news?
I think this is a head fake by the market. Sometimes the market just plain out gets it wrong. I think Phil's explanation of it was right on. You're talking about the main cabin, but you know what? That's not where the money's made. It's the front of the cabin. Is that what you're about to say?
100%.
And look, the headlines from this conference are that they actually guided to the high end of their prior guidance range. So obviously, if you look at more than just the main cabin, if you look at the whole cabin, they're making good money.
And it's the loyalty programs that Delta has with Amex, it's the premiumization, it's the experience that people want. What Delta is doing is creating more and more premiumization. It's just not the main cabin. You can upgrade yourself or you can buy extra. And I think that's where you have it. In addition, by the way, with Spirit Airlines now going into bankruptcy, you're going to see more demand going into the big
carriers. But you can't tell me that the main cabin doesn't matter. You can't tell me Jim, I'm sorry. Jim, you can't cite TSA lines and all that stuff to try and make a bullish case on the airlines, and then when there's a drop-off in the main cabin, try and argue that it doesn't matter. You know what I'm saying? It's not just premium cabin people who are coming through the TSA. You can't use that as a metric to make a bullish case on the airlines, and now Phil comes with his news that's breaking down and said it doesn't matter. They make all their money up front.
Look, I told you I went out to a steakhouse the other night. You know how much they charge for the tofu?
It was after the Oracle report.
You know how much they charge for the tofu? A lot less than they charge for the filet mignon. I don't know. I mean, you're saying I can't. I'm saying I can, and I am. This is the argument that where the money is made is the front of the cabin. And look, you fly a lot. You know that the front of the cabin has been physically extended a lot more. There isn't that much in economy
So you're
left.
telling me it doesn't matter if you fly and the front is packed and the rest of the plane is empty, it doesn't matter?
Well, the rest of the plane isn't empty.
Well, you know what I'm saying.
Yeah. It doesn't matter. I don't know.
You look at the TSA traffic and you're like, well, the airlines are going to be great because the TSA counts are huge.
Yeah.
But now you're telling me, well, now nothing matters as long as the front of the plane is full.
They're flying in the front of the plane, which they've extended to have more seats, where they charge more. I'm not being facetious. Again, just look at what the guidance was today. They had prior guidance for this quarter coming up, 0 to 4% growth. They now tightened that to 2 to 4% growth. They're doing fine. Delta's doing fine regardless of what the main cabin's doing.
All right, so when we were talking about Apple, I was thinking of buybacks, just to get back to that, because there is a story today about buybacks that I think you guys will be interested in hearing about. U.S. share buyback volumes have further room to increase. This has always been a Joe thing when talking about positive catalysts for the market. This means an additional $600 billion of share buybacks, they say, on top of the record $1.5 trillion annual pace seen this year. In other words, the buyback force, which has propagated the equity market strongly this year, is likely to become even stronger. We've gotten Tapestry $3 billion yesterday. This month, Airbnb and Uber. We had notable ones throughout July, whether it's Newmont or Schwab or Bank of America or Southwest or Novartis or Morgan Stanley or JP Morgan. There were others in May and June as well. Joe?
The one name left off there is Berkshire Hathaway. They have not been buying back their stock, but I think towards the end of the year, if we get a rate-cutting cycle, there will be more intention to buy back stock. Now, you can make the argument that maybe some of those buys are not good buys, or maybe some of those buys are a little bit over-aggressive in their nature in terms of the amount and the quantity, but I still think that acts as an overall catalyst for the confidence of the market. It's a sentiment indicator more than anything else.
Agreed.
You know I love buybacks.
Yeah.
And with regards to Berkshire, I think they're going to buy somebody else's stock back. But regardless, look, I like when you've got companies like Apple, like Citigroup, like any of a number of companies, Wynn Resorts, that are buying back so many shares that they shrink the share count. So when you combine net income growth, which is going on in the strong economy that we've got, with a lower denominator of shares, that makes for a pretty good pop in earnings per share.
Last thing I want to do in this block, IPOs. We had Klarna yesterday. Nobody interested? Josh, no interest in that? Too busy at Future Proof to focus enough on it? What do you think?
I don't know. There are so many other ways. If you're bullish on buy now, pay later, PayPal, Affirm, like if that's like really the theme that you want to invest in, you're not restricted to buying the shares of a recently public company that we haven't even seen them do an earnings report yet. Who knows if we can trust this as a longer-term investment theme. So it's not that I'm bearish on Klarna. I think there might be cheaper ways if I cared. There's also XYZ Block. So like everyone's doing buy now, pay later. It's not crazy novel. And so I don't know that this is my type of situation.
Okay. Josh, you have a take on this name? I mean, Nike. We've been talking about, Vuori and On Holding and some of these other names that are, taking market share. So I'm interested to get your take on Jim's trade. In it, rides it up, goes down, buys it back.
So On is one of these names where I was right on the story, but I traded it horribly. I somehow found a way to lose money on this thing. But I started trading it a couple of years back when they really started to emerge as an upstart. They're not an upstart anymore. This is a really well-established brand. It's a tough category. It's not an area that viewers will remember me making a lot of long-term investments in, because with fashion, including footwear, fashion comes in, it goes out. People overestimate the popularity, then they underestimate it. And I really feel that this is a market where you have to pay close attention. And frankly, I just don't have the time in my life to do that. So I don't like that chart. Go back a little bit. Pull me out. Here's what I don't like about it. You got a double top, and then you're in this kind of nascent downtrend. You can see that it bounced from this level once before, and maybe that'll happen here. If it doesn't, like, what's your exit strategy? Like, hope the next earnings report is good? So I'm not saying that Jimmy won't make money, because his time horizon is probably different than mine. I just don't love setups that look like this technically.
You said that very eloquently. I totally agree. It's a horrible chart. That's why I'm taking a very small position, and we'll see where it goes. If it doesn't work out, if it starts doing a Nike, I'll get out of it. I'm not going to be married to this stock.
I got a question for you, though, on the revenue growth. I'll put my glasses on to read this. 2021 plus 28%, 2022 plus 23%. The growth disappears, down 9/10 in 23, down 14% in 24, and on pace in 25 to be down 16%.
Yeah, I'm looking at the earnings per share growth rate on FactSet, long-term growth rate of 38%.
Revenue growth.
I know. I got you. I heard you.
So why are you bringing up earnings?
Because that's what matters. Don't do this to me. That's what matters to stocks.
That is not true. What matters to stock is the combination of both.
Joseph, you know I love you and your way of investing. You wrote the book. It's a great book. Buy high, sell higher. I love it. I'm buy low, sell high. Okay? We're looking at different points in the stock trajectory here. Okay, for me, the valuation on earnings matters. I totally get what you're saying. If this is a growth stock, and it was when it was at 40 to 50 times forward earnings, that was absolutely based on top line growth.
The reason behind the deceleration in revenue growth would be, how do I think about that?
It's a bigger company than it was. I mean, it's just that simple. It's a lot bigger company than it was. I think also what Josh was saying about, almost you were saying, Josh, it was kind of like a fashion company, like it'll be in one day and out the other. That is a risk, but I think that's a risk that's gotten smaller as the company has gotten bigger. And by bigger, that means not just more products, which they have more, but they have more geographic distribution. So hopefully, it's not quite as susceptible to what happens to the Gap or Abercrombie and Fitch, where they get hot on some, khakis are hot and then khakis are not hot. White t-shirts are hot and then they're not hot.
You can't maintain the same level of revenue growth.
I understand that.
I mean, look at the mega caps. Yeah.
I understand that, but
we're going to pick those apart too. I mean, their revenue growth for many of them is not at the same, percentage of what it's been.
It's low, large numbers, but it's also brand. You're betting on the brand regrows again.
That it's not a fad, that it's a brand.
Right, that it's a brand. It's not a cyclical, it's a secular growth.
Exactly.
Well, I don't know too many people arguing that it's a fad at this point either. So, all right, let's talk some stocks.
Sure.
Because that's what makes this the most fun, of course, when you join us. As I always say, your unofficial financial advisor is at the ready. He gave you eBay the last time, which you literally bought live during the segment. I don't know if you're still in it or not. You can tell us, but he has another one for you. Just give us an update. Do you still have eBay, or did you sell it?
I still have it. I have my notes at the ready here, okay? As you said in the prior segment, not only that, my finger is on the buy button, so go.
All right, Josh Brown, you're up.
Good afternoon, Mr. Michaels. I trust your day is going well. The last time we spoke, I made a commitment to get back to you only when my team isolated a situation with tremendous upside potential. I have it here. I have a lot of people to speak with today, so if you could just take some notes while I'm going, it would really help me out. The company is Home Depot. All right. Trades on the New York Stock Exchange under the ticker symbol HD. Stock currently sells for $420 per share. Okay. We think it could be on the verge of a monster breakout. Control, give me that 1 year chart. Let me take a look at that. As you can see, HD is in the process of completing a bullish cup and handle formation with overhead resistance at about 430, just a few points away. Al, amongst all of the Dow 30 stocks, HD has the most significant amount to gain from the 30-year mortgage rate falling, as this would drive existing home sales to pick up after a housing ice age over the last 4 years. I think the ice age is over. As of Q2, the company's now posted 3 consecutive quarters of positive comps. What I want you to do with me today is just start small. Pick up a round block of 1,000 shares, approximately $420,000. When I prove myself with this initial trade, all I would ask is that you consider working with me in size down the road. Does that sound fair enough?
Hold on. I want you to know I have owned that stock since Arthur Blank was running the company. That's how long I've had Home Depot. I am going to add, I just did. I took your advice. I added to the collection here. But I have to ask you something. Remember years ago I talked about one stock that I own, FAS, the Direxion 3 times banks and all of that, and you told me it's a day trading stock. I've now had it for 15 years. There it is. There it is today. But take a look at that. Go back to 2010. I've owned it since 2010. That's a chart.
Yeah. That's that's one hell of a chart. That's one hell of a chart.
Josh, I want you to buy some FAS now. Get in there, would you?
Yeah, that's only fair.
I'm gonna skip the triple leverage, but I appreciate the counter recommendation. Thank you, my friend.
You got it.
Al, let me hit you with one more thing if I could, and
Sure.
and you make me think about it when you mentioned you've had this stock for so long, since Arthur Blank, you bought the team.
Correct.
Since he bought the team, and since many of the owners who currently own the clubs bought their teams, the valuations have just gone through the roof. I'm reminded of it because I've just finished watching the Cowboys documentary on Netflix, which was amazing, and you're all over it, which was great to see you. And what Jerry's done down there, as we just came out at CNBC with our updated valuations. You can find those at CNBC Sport, of course. $12.5 billion. I don't know off the top of my head what the Falcons are worth today, but do you marvel as well when you see how much these teams are worth as long as you've covered this league?
Absolutely. Because I know that, Jerry bought the team for $140 million. And as you say, they're worth $12.5. When I was doing the San Francisco Giants, I did a ton of baseball. The San Francisco Giants in 1975 sold for $8 million. $8 million, which is like one at bat for somebody like Mike Trout of the Angels. It's crazy. And a lot of it, of course, has to do with media rights. Everybody knows that. But, and also, too, I remember when, I used to be able to go to a football game and, get in for $20, and now it's like $1,000. So it's been crazy. It's been wild. Will it continue on? I don't know. It might. But, in terms of an investment, there's been very few better investments than owning a sports franchise over the last several years.
Yeah, well, many people think it will continue to go up as we bring it full circle because of companies like Amazon and others who are now in the game. Al, we wish you the very best. You have a great call tonight, and we look forward to talking with you again soon.
I love it. Every year. Tradition, like none other.
Yep, that's exactly right. Pardon the masters, but it's all good. We'll see you soon. Al Michaels.
Thank you, man.
All right, coming up, risky business, what Robinhood just announced that could mean big profits or big losses for retail investors. We'll debate it next. All right, welcome back. Robinhood rolling out a new slate of features on its trading platform, including the ability for users to short stocks. Now, what's your opinion of this? As a shareholder in Robinhood, you can speak to that as a shareholder. You can speak to it as just a general idea of opening up their platform to investors to short.
As a shareholder, this is a catalyst, a further catalyst, a tailwind, if you would, to continue the positive momentum for a company that fundamentally has recreated itself, diversified the model, and has introduced a significant amount of intellectual capital that is really advising Vlad in a very positive way. In terms of shorting stocks, it is just not my strategy. I don't believe in shorting stocks. If I want to take a view where I want to short the market, I'm going to go to the S&P, the mini S&P or the mini NASDAQ. I'm going to click the button on the futures, and there is going to allow me to get my short exposure.
I can see some people saying, well, it's this younger cohort. Should they really be shorting stocks, and is it dangerous? And then the other part of me is like, well, if you don't learn now, when are you going to learn? One part of the market that many people, including people like Steve Weiss, on our program employ on a regular basis. So we shall see, but it's obviously the market likes it. It's up 3.25%. Finals, we'll do them next. And let's do some final trades here on a pretty big day for stocks. Josh Brown.
I mentioned Rocket on Tuesday as my final trade. The stock has officially broken out, new 52-week high. Staying long, it looks great.
Jimmy did this just to put his thumb in my eye.
That has nothing to do with you. The stock market's getting it wrong on Delta Airlines. Surratt agrees with me. There's always a
I feel like there's extra motivation to this. What do you think, Surratt?
Listen, I think it's the best run airline out there.
Is he trying to put a pie in my face with this one or what?
He totally is.
That's what I thought. What's yours?
Tech Resources, merger with Anglo. I think it's a great merger. The stock's going to go higher from here.
Keep your eye on Tesla. This is a trade of all the Mag 7. It has the highest short interest at 3%. Could go above May's high.
Well, the discretionary sector doesn't look like it does today without that right there. I'll see you on the bell, 3 o'clock.
Hey, everybody. It's George with Blue Cloud Trading. Currently Thursday, September 11th, 4:45 p.m. The market is closed. And so now we can take a look at the indexes. We'll take a look at the stocks that they talked about on the show, on the halftime report earlier today. Not all of them. We're going to talk about 13 of those stocks, and I've highlighted some of the strongest ones. So here on the left, we're going to take a look at the index ETFs. the SPY, the QQQ, the Dow, the Russell 2000 ETF. We're going to take a look at some of the Mag 7s like Tesla, Apple, Meta, and Nvidia. We will look at the sectors, so the strongest ones, right? And we've got one request from one of our members here, BILL, which is Bill Holdings, Inc. So let's get started first, okay? Let's first start off with what happened today. Well, okay, let's take a look at the news. Let's take a look at the news real quick. As I mentioned yesterday, okay, we were waiting to get that information about the inflation. Now, the thing is, the information was actually negative. August inflation increase likely won't derail the Fed rate cut. If anything, it's going to strengthen it because of the weakness here. And so here, the CPI reading showed an increase of 0.4% for the month, according to the Bureau of Labor Statistics, higher than the 0.3% that economists polled by Dow Jones were expecting. However, the index recorded 2.9% on a 12-month basis as expected. And the report also comes a day after the producer price index showed an unexpected decline of 0.1% on the month. So the labor market received yet another sign that it's slowing, as weekly jobless claims saw a surprise jump Thursday after job growth figures were revised down. Earlier this week, workers filing for unemployment compensation for the week ended September 6th increased 27,000 from the previous period to a seasonally adjusted 263,000, the highest level since October. That's more than 235,000 estimate that was penciled in. So it says here, with growing evidence of softening U.S. economic growth, markets are pricing in a 0.25 percentage point at the conclusion of Fed's September 17th meeting with near certainty. Anyway, so there's no correlation, as I've said in the past, between how the economy is and how the markets perform, because the markets get basically when the interest rates start to drop, more money comes into it. And so this is what we're seeing here. The S&P, well, actually, let me go back. We're going to take a look at this page right here first, okay? So what happened today, you can see that the Dow basically gapped up in the morning, moved up, and it was up 1.36%. Big move for the Dow Jones. NASDAQ also jumped up 0.72%. The S&P 500 was up 0.85%. Russell 2000 was actually up the most, 1.85%, almost 2% today. If we look at the heat map, what were some of the strongest stocks in the S&P 500? Look at Tesla, big move up, 6.04%. The financials did really well. All the financial stocks here, you can see the majority of them. A lot of the healthcare stocks did well. Utilities, basic materials, real estate, energy stocks were kind of mixed. Consumer defensives even did pretty well for the most part. Oracle was down 0.624 after its big jump this week. Palantir was down 1.43. Broadcom was down 2.69. AMD down 2.43. Now, that's the one-day performance for today. Netflix was down 3.54. But let's take a quick look at the one-week performance. We can do that by clicking this little button here. And let's see how stocks have been, okay? Oracle is up 38.05% for the week after yesterday's big jump. Nvidia, Broadcom is all up. Google's up. It looks like Amazon, Apple, Microsoft, Berkshire, Visa, MasterCard. Those are some of the stocks that are down. Netflix, T-Mobile. All right, Starbucks down 5.34% this week. Chipotle Mexican Grill down almost 6%. Boeing down 4.66%. Fastenal down 5.85%. Some of the bigger, the brighter the red, the bigger the drop, as you can see. And the brighter the green, the bigger the move up. So Tesla, for example, is up almost 9% this week. Now, let's also take a look at the groups real quick. And this is the performance for the day. You can see pretty much everything was up except for energy, down 0.17. Basic materials and consumer cyclical were up the most. All right. Okay, so now let's take a look at the SPY ETF. We are using the Ichimoku indicator. If you're not familiar with this indicator, check out my prior video. I did go in depth about how to understand how this works. I mean, just briefly, we want price essentially to be above the moving averages. The 9 period here is the green. The red is the 26. Above the Ichimoku cloud and the Chiku span, okay, which is the closing price. We want that closing price, which is projected 26 periods ago, to be above the candle 26 periods ago. And we want that Senko span A above Senko span B. So as you can see, we're in that essentially means for the chart is that it's a strong uptrend. Okay, and we've been in this very strong uptrend. There have been, a lot of people that are kind of shocked and surprised at how well the market has been performing. But ever since, that April 2nd drop that we had, right, with that tariff announcement, that never really materialized into too much. And it's also being challenged right now probably at the Supreme Court. We're going to find out what happens, whether or not those tariffs actually end up going into effect. So right now the market is doing pretty well. The SPY, as you can see here in the weekly charts, look very strong, and here it is on the daily chart. Okay, so we are now the ADX is starting to move up. That's an important thing. That's what we're looking for. We want that positive DI9 to be moving up, the negative DI9 to be moving down, and simultaneously that white line, we want that to be moving up. That means the momentum. That's what ADX is. It's momentum. And if that's increasing, all right, while the green line is above the red line, that's very bullish. The QQQ ETF up 0.58%, broke through that 583.32 level based on that little candle right there from August 13th. So that's good. Now, it didn't really move that much up. It was at 584.08 is where it closed. But overall, I like the Qs. The Dow Jones, you can see this where this consolidation was taking place. It broke through that level. That's what I call like an ascending triangle type pattern. You see that right there. That's called an ascending triangle. It's when you have a flat level of resistance, okay, with a slope on the bottom there of support, and then price breaks through. And it happens on high volume, like you see right here. All the things that we're looking for with the directional movement is, in effect, up 1.31%. The ascending triangle, let me show you guys that pattern real quick here. Let's zoom in on that. It is right here at the top. Ascending triangle. Okay, there's the resistance level. There's that slope up. That's what the ascending triangle looks like. Once price breaks through, it's more than likely to continue moving up. All right, there's a higher probability in that scenario. The opposite of that is the descending triangle, where you have the slope going down and then you've got that flat line. We're in the bullish territory here, so that's good. What about Russell 2000? That one also broke through this little level here. Russell 2000 up 1.85%. I like that one too. It's going to come close to some monthly resistance of 244 soon, though. Here's the monthly level. Goes back to that level. But once we break that 244.98, are there any other? No. Let me get rid of this. I'm not sure how that got up there. That's the high point that needs to be basically broken through, 244.98. And then we'll be hitting all-time highs for the Russell 2000. That's been basically stuck in consolidation now. I mean, let's talk about that. Since 2020, basically. All right. Here we were in November 30th, 2020. So you can see the box that's developed here since 2020. It's been just kind of moving all around. There's no clear move up. But once we break that resistance level, that 244 level, that's going to be huge. It's going to probably lead to a nice expansion to the upside. That's what we're looking for. The VIX dropped some, down 4.17%. Okay, that's the volatility in the markets. I like that. I love to see that declining. That's what you want to see. That's a monthly. Here's a daily. All right, down at the 14.71 level. FEZ, it represents the Eurostoxx 50 ETF. This one was up 1.05%. The only negative here with this particular ETF is the fact that the Tenkan-sen is still under the Kijun-sen, but price is, moving in the direction that we want to see. We've got to get through that 61.50 level. Overall, I like it, but I did not give it a blue flag because of the fact that the Tenkan-sen is still under the Kijun-sen. If they have a blue flag, that's how I basically label the strongest stocks or ETFs based on both the weekly and the daily time frame. So I'm looking at both time frames and then assessing the technicals and then giving it a blue flag if it looks very bullish. Home Depot's one of them, for example. That was one of the stocks they talked about on the show. In fact, I think that's the one that Josh Brown recommended, right? And so up 2.47% today. As you can see here, it broke through that 414.50 level. This is one of the stocks that came up, I believe, on my 20 stock watch list this last weekend that I was, watching closely. But yeah, it's up 2.47%. Here it is on the daily, and here it is on the weekly chart. Okay, very nice. In fact, on the weekly chart, the single span A still hasn't cleared. It's almost there, but it's moving steadily up. It looks like it's just about to break through the single span B there. The Chico span is above price. That's all very important. It's very bullish here on the daily. FAS is the Direction Financial Bull 3 times shares. Now, this is something that you only want to trade. This is more of a day trading type ETF because it's 3 times the financial ETF. Okay, so FAS, it moves out a lot. 4.9% today. Here's the weekly chart. Looks pretty bullish on both time frames, and these can be very. The beta is 3.01. That means it moves, like I said, 3 times the probably like the XLF, right? RKT, Josh Brown's final trade today. Now, this one was looking great earlier in the day because price had in fact moved up and created a higher high from the prior day. But then look what kind of candle was developed here, a shooting star. These are really dangerous when you see them, especially far away from the moving averages, right? The momentum is still to the upside. The volume's been increasing, but a lot of selling took place. I'm guessing a lot of profit taking took place here, all right, today. So if we look at it on the 5-minute chart, we can see that. Here's the 5-minute chart. Here we are for September 11th. You can see what happened. Price gapped above the cloud early in the morning, came down, retested the bottom of the cloud, got back above it, and then moved up to this level. So it moved up to around, what price was that? Around $22.56, okay? $22 and 58 cents before dropping 6.5% this afternoon. So that it reached that high point around 1:30 p.m. and then it just started dropping. So, that's what can happen, especially when people want to take some profits. BAC is the daily chart. Bank of America, it needs to break through that 50.92 level, but overall, I like it, right? Looks good on the daily and it looks good on the weekly. It just has a little resistance right there. Citigroup, looking good, okay? I like Citigroup. Here it is on the daily and here it is on the weekly. What about Goldman Sachs? Beautiful, right? I kind of upset that I didn't catch this in time. So Goldman Sachs broke that 753.33 level. That occurred on Tuesday, September 9th. And since that point, since it broke that level, it's moved up about 3.5% almost. So, yeah, it still has I think it still has a lot more room to run here. Goldman Sachs has been stuck in a very long and extended consolidation zone. And when that occurs, there's a higher probability that the stock will expand to the upside quite a bit, in fact, because there's been this waiting that's been taking place here for so long. And now the buyers, once they started coming in, the shorts are no longer interested in shorting this at this point, okay? Maybe once it starts getting a little bit, pricey, once it starts moving a little too extended above the moving averages, then yes, I can see that happening. Right now it looks great. Morgan Stanley also looks great. Okay, Morgan Stanley broke through this little consolidation area here. Okay, also on, let's see, what day was that? That was on September 9th. Okay. Oracle. We talked about Oracle yesterday. I said, guys, it looks like there's a little bit of profit taking that's taking place. Yesterday, the selling started happening towards the end of the day. You can see that from the long wick. And then down 6.23% today. Okay. Got under the low of that candle. So that's, like I said, that was the best time to probably take some profits. Whenever you see a big jump like 40% in one day, you got to take advantage of that. Whoops. Oh, I just unflagged JPM by accident. Let's go back to JPM. Let's find JPM. Okay, and flag it. Okay. JPM is actually one of the stocks I bought back on August 12th, and I'm still holding on to that. And it's still moving up. It's beautiful. I like the fact that it's moving, and it looks like it broke through this little high right here. What is that high? At 305.15. It's at 305.56. That's good too. I also had this position back here in May and closed out of it on June 30th for 11.3%, and then also back here in January through February for 6.4% profit. eBay, and I share all the trades, folks, with Legend level members. If you want to become a member, really easy to do it. Show you guys very quickly. Right here, just hit that join button. Okay? Hit the join button, very important. Once you do, what happens? You click that join button. Looks like they got rid of that subscribe plus thing. That's good. This pops up. Blue Cloud supporter, Blue Cloud trader. This is where you can get the exclusive member only videos where I go over my entire portfolio once a week and talk about the trades, why I added positions, why I closed out positions throughout the week. But guess who gets the daily updates? Blue Cloud Legend level members. So you're going to get daily updates on my trades, as I said here. Okay. You'll also get access to some of the day trading videos that I've recorded. And you can request stocks to be analyzed. And under Blue Cloud Legend level membership, basically, once you've become a member, right? Once you've joined, there'll be a new tab that pops up next to posts here, and it will look like this. This will pop up. It's called membership. And then you click on that, and you'll see the posts. All right? Alrighty, let's get back to what we were talking about. So we talked about JP Morgan just a second ago. Here's eBay. We talked about that briefly. That's had a nice run. I mean, but right now it's currently looking not as good. That's why it does not have the blue flag here. The faster moving average, the 9 period, crossed under the red line, the 26 period. So that's bearish. Okay, it's a bearish signal. It is above the cloud still, so it still has support. But I'm just saying I would not be adding positions here based on that. Delta Airline overall looks good, except for the fact that today it was down 1.55%. It closed under the Tenkan-sen on high volume. Okay. And you got a crossover, negative crossover on the negative DI9. That's also not good. But the fact that it came down to the Kijun-sen, the 26 period, and you see the wick that was developed right there. It touched it, and the buyers were like waiting right there, essentially. Maybe they had their buy orders waiting at the Kijun-sen. Whoop, it popped up. Here's the 3 minute. So you can see that happened probably around this time here, maybe around 12:20 or so, in this little range. Once it got above that little box right there, that little consolidation area, it just started expanding to the upside. From that point, it moved up about 2.27%. But right now, would I be recommending taking a long position? No, because of what I'm seeing here on the daily. But on the weekly chart, we are still technically sound as far as the Senkou span A. The light colored blue line is still above the purple right there. We've got price above the cloud. We've got the faster moving average above this lower one. And we've got the Chikou span, the white line above the candle 26 periods ago. In fact, that just recently happened. Okay, a couple of weeks now. So I like Delta Airlines overall, but I would hold off just a little bit, wait for that next buy signal. All right, and then they talked about Tech Resources Limited. I think this was Surat's final trade. Now, on the daily chart, it does look pretty good. It does have some resistance on the daily right about that level there of 42.38. Okay, but on the weekly chart, do you see what I'm seeing? It's right under the cloud. So that's a bearish resistance level, very, very bearish. And although price got above the 200-day here and the volume has been increasing, this is going to be an obstacle that needs to be broken first. It also has to take out this high of 42.38, which it has not done yet. So yeah, I'd hold off on this one too. ONON, okay, on holding AG on the weekly chart has been under the cloud now for, looks like 6 weeks. Okay, doesn't look very pretty here on the daily chart. Very obvious decline here, right? It could certainly reverse. Let me go back to the weekly and look at that one more time. I mean, it looks like it's almost made a double top up here. You can see that's a very negative pattern, maybe even a triple top. Do you see this? Here's the first top, It dropped a little bit, created a second top, dropped, created a third top, and then dropped. A triple top pattern. Let me show you guys that pattern real quick here. Whoops, hold on. I think I have it right in here somewhere. Whoop, there it is. So triple top is a reversal, okay, pattern. So this is what it looks like basically. It comes up to that level, drops. Comes up to that same exact level, drops. Comes out to the same exact level a third time and drops. Now, if it gets under the first low here, as it, you know, in this image here, that's probably when you have to really be careful that it could continue. And let's see, has it done that yet? And the answer is no. Okay, so the top here it is. This is probably the low that I'd be watching right here, the 35.20. But that's how far away is that? That's about 23% away from where you currently are. That's a weekly chart we're looking at. So I don't know. Personally, I would be exiting this position if I had a position in this, based on what I'm seeing here. It was starting to show a little bit of support right here. Okay, for a little bit. But tomorrow is Friday. We'll know exactly where this candle stands tomorrow. If it stays under that low there, okay, I would probably be taking my profits. And, well, not profits. If I don't have a position in this, but it depends on when you bought this stock. If you bought it down here, you'll have some profits. But if you bought it up at these highs, it's probably, you know, a loss. So anyways, let's see. Mag 7. These are the 4 stocks we're going to look at. Tesla. Today, this week, broke through for a second week above the Ichimoku cloud. The one problem with Tesla on the weekly chart is the fact that, as you can see here, the cloud is still bearish. Single span A is under the single span B. ADX has been dropping still. Maybe it's starting to kind of flatten out a little. And another important thing, I mean, the good news is it did break through this prior high here of 367.71. So it got above it. 368.81 is where it closed. All right, on the weekly. I take that back, folks. It has not closed there because it is a weekly chart. Remember, Friday, we'll know the answer to that. If Tesla drops tomorrow, it's most likely going to be still under that resistance level. So I would hold off on Tesla until closer to the afternoon before considering adding a position if you're thinking about it. Personally, I wouldn't, because the cloud here still is not there yet. Okay, I'm just giving you a heads up that that's an important level that needs to clear. Just because you got it above it slightly today, look at that. It wasn't a really ultra strong breakout, right? It's super close to that high. Therefore, I wouldn't, I'd take that with a grain of salt. Apple, bullish harami on the daily chart, but it's under the Tengen-sen, so no on Apple. Meta, in between the two moving averages, and the faster one is under the slower one, so no on Meta. Chico span is also underpriced, all right? NVIDIA, we've got the faster moving average under the slower one, down 0.09% today. Yeah, it's not the right time to be adding, in my opinion. Not quite yet. Maybe soon, because on the weekly chart, NVIDIA does look pretty good. It did, you know, pop above the Tengen-sen. If we get a bullish day tomorrow, that could be the catalyst, you know. And then what about the sectors? I'm just going to run through these very quickly on the daily chart. I've already looked them through on the weekly. XLB looks good, but it's coming close to 92.86. ETH had a nice breakout above the Tengen-sen today, up 2.43. That's Ethereum, the Ethereum ETF, for those of you who are following the crypto. Silver looking good, up 1.02%. I like that. GDXJ, very strong still. Look at that beautiful 45-degree angle. Copper, same thing, up 2.34%. That's the COPX Copper Miners ETF. GDX, the Gold Miners ETF, also up 1.84. Communication Services, XLC, up 1.54. Semiconductors up 1.03. I like that one too. Did it get above the high here? The high of 302.98? Yes. Closed just barely above it. Granny Shots, Tom Lee's ETF. Yesterday I mentioned how it broke through that box, and I said, hey, if it breaks through that resistance level, it's more than likely, there's a higher probability that it's going to continue moving up and expanding to the upside. I think that's what we're seeing here right now, an expansion. XHB, home builders, up 2.6%. Looks good. Okay, there's the daily chart. Gold is looking pretty good too, even though it was down 0.15% today. It did basically opened up lower and then closed up for the day. So if you look at a 5-minute chart, yes, it gapped down in the morning, but then it spent the rest of the day climbing back up, right? Above the clouds. Very important to get above those clouds, folks. XLY, consumer discretionary. Let's go to the daily chart. Here it is, popping above 235.85. Has that 240 level. It needs to clear. XLK is above its resistance of 270.05. But these aren't really bullish candles. It doesn't really matter. It has, in fact, cleared those levels. ADX is moving up. I like it. Financials popped finally back above the Tengen-sen. That's the XLF. Okay. It was briefly in between the two moving averages here. We were waiting for the report, and this is how it responded, up 1.64%. And then the rest of these are not looking that great. That's why we're not going to cover them. These are the ones that are something off technically with these ETFs. Could be minor, could be major on either the daily or the weekly chart. I'm not going to go into them. And then finally, BILL, Bill Holdings, Inc. One of our members requested this one. So this one has been finding some support at these levels. It looks like it might be building a little double bottom pattern, which is a bullish pattern. But, and the other thing I'm noticing here on the weekly chart also is a recent, crossover on the positive DI crossing above the negative DI. So that's good too. And if we look real close, we can see that the ADX is in fact starting to edge up. That's good. That's positive. In fact, also the Tengen-sen crossed above the Kijun-sen right there too, these last couple of weeks. But today was down 2.29%. We're still under the cloud. We still have a bearish cloud. We still have a declining 200-day moving average on the weekly chart. So I wouldn't recommend adding any new long positions here until we break through that cloud and 200. But if you're holding on to this position, you're not wrong to be holding on at this point because it has been moving up steadily for the last 4 weeks now. If we look at the daily chart, yes, today was a down day, down 2.29%, but look at it. It's above the moving averages here. The future cloud has turned bullish on the daily chart. The ADX is moving up. The positive DI is above the negative DI. It's coming close to that 200-day moving average. So I don't know what's going to happen once it reaches that level. It could reverse. It could break through. You got to wait to see what happens. This is a bearish engulfing pattern. So there's a lot of mixed signals here. I just wouldn't add this position here, obviously, based on what I'm seeing. But if you're holding this position, you got to manage it. And so I would be managing it on the shorter time frames, like the daily time frame, maybe switch it to a 4-hour time frame and a 2-hour, and then decide, okay, where's my where am I going to start crying uncle, and I want to pull out of this stock and exit. It's really up to you. But again, on the daily chart, I wouldn't be doing that because it's looking pretty strong on the daily. And like I said, it looks like there is a little bit of a recovery happening here on the weekly. Okay, and that, folks, is going to do it. If you guys like this software and want to, check your stocks out the way that I do, it's very easy to use this software. In fact, I've even created a layout so that's exactly like this that you can use, all right, and you can access. And here's how to get access to it. What you want to do is once you're on Blue Cloud Trading here, okay, you'll see that join link right there. Click on the 8 more links right here, right there. Click on that. Read a little bit about my channel, scroll down, and then the third one down. That's where you'll get a $25 coupon for the software. You just click on this link here. Let me show you real quick. You enter your email right in this little box. You download the software. Here's the pricing information. Click on pricing, software plans, and data. All right, click on monthly if you're going to be doing monthly. I mean, you could even do the basic for free for 1 month. Okay, so that's why not try it out. But I would recommend the premium, the middle point, the mid service here, because there is a premium plus, which is $100 a month. That's quite a bit. Premium should cover most of your needs, including being able to draw on the charts and track, your stocks with alerts and everything else. it's yeah, it's the software is fantastic. I've been using it for years now, and I love it. What else can I tell you about TC2000? Oh yeah, you can also, open a brokerage account through them. You can trade through the platform itself. Okay. You can day trade. You can practice trading as well by downloading the software. If you want to practice without putting real money, you can do that. It's called paper trading. So, when I first started trading, when I was in my early 20s, I basically, that's one of the things I did a lot of paper trading, because you don't want to put your real money on the line in the beginning until you get very familiarized with the software, right? And then once you are familiarized with your software, and you're noticing that your profits are higher than you expected them to be, and you're doing okay, then you can start putting money into the account and trading off of it. Their commissions are pretty reasonable. You can see them right here. Small trader plan here, $1 plus 0.005 cents per share. So like if you were to buy 100 shares, for example, it'd be $1.50 to trade that. 200 shares are $2. All right. And yeah, they've got margins too, but I would, if you're a beginner trader, you don't want to be taking money out on margins. You want to trade what you've got. Okay. Money that you can afford to lose. That's what the stock market's about. If you have extra money that you want to maximize the profits on, and it's okay if you lose this money. It's not going to, hurt your living situation. You don't want to put your rent money towards trading, obviously. Well, then this can be another source of income for you. Guys, that's going to do it for this video. Thanks for watching. I appreciate all of you who have become members, and also people who have just subscribed to the channel. It's really easy to subscribe because, if we go to hit that subscribe button there, once you hit the subscribe, hit the notification bell as well. And thanks for watching.